Yes, there is definitely more uncertainty in Toronto real estate in recent years, and with small business confidence at a 25-year low, it is clear that economic concerns in Canada are growing. Here's the thing. When the markets are booming, people usually get overly optimistic, and when things feel shaky, people generally feel too pessimistic. But waiting for that right time doesn't always lead to better results. So let's break it all down in terms of what's really happening in the world of Toronto real estate so that you can make smarter decisions. But first, do us a favor, hit that like button, subscribe for more real estate investing tips, and if you are serious about investing in Toronto multiplexes, book a call with us. Let's talk about the biggest fear that's keeping people on the sidelines. What if Toronto real estate prices drop further? Yes, there is a chance, but prices have already dropped 15 to 20% since 2022. And then after that, the market has been pretty much flat for almost 3 years. Now, you might wonder, if the economy worsens, wouldn't that make prices fall more? Well, here's why we don't think that's too likely. Toronto does have a solid foundation for strong housing demand, whether from end user buyers or long-term renters, and we do have limited supply in housing stock, not condos, houses. Plus, as interest rates come down, houses will become more affordable, which will help to stabilize the market too. Now, BMO thinks that we are halfway through a market correction, meaning that prices have probably hit their floor already, but they do not expect prices to return back to the 2022 highs until 2029. But unlike the 1990s, where rates stayed high for years, today rates have come down, and so this does improve affordability. And so in our most likely case, we do expect the market to stay flat in the medium term. No big crash, no huge boom, just steady, just like it's been for the past few years. So in this case, is it better to wait and see, or should you consider jumping in now? Well, in today's buyer's market, there's a lot less competition, and it means that you can negotiate deals that weren't possible a few years back. Let's just break down the numbers. If you buy a property today, you can expect a return of at least 10% to 15% just from rental income alone, based on a 20% down payment. Not bad, right? And if you take a property that needs some work, whether it's a renovation or a conversion or even a build, your returns could be even higher. And also consider this. While you're waiting, what's happening to your money? Is it just sitting there losing value because of inflation? Or are you getting less and less because GIC rates are falling? Or are you facing more uncertain returns in the stock market compared to the relatively stable rental market in real estate? So here's the bottom line. Even if the market does stay flat, it's probably better to invest in real estate rather than to wait on the sidelines. Now, let's imagine the market picks up as the third scenario and prices start to rise slowly. We know that prices are not going to skyrocket anytime soon, but if the market does come up slowly, what happens then? Well, here's the thing. When the market does heat up, it does become more competitive, and you will end up paying more for the same property the longer you wait. And so as prices go up, it does get harder to find good deals, and the buying process becomes more stressful with more multiple offer situations and fewer conditional ones. Plus, your rent yields could start to shrink too, and so waiting for the market to improve could actually mean missing out on better deals today. Now, let's consider another factor. Tariffs will make things more expensive and add inflationary pressure to home prices. They could also hurt the economy and weaken GDP. And so what this does is it might offset the inflationary pressure on home prices and cancel each other out. The bigger challenge right now is not actually the tariffs itself, but the uncertainty around how much tariffs might affect us. Once Trump figures out what he actually wants to do and we get past the initial spike in inflation, things could start to stabilize. And over time, as tariffs become the norm, businesses will adjust and the market will adapt. Looking ahead to the upcoming election, new leadership could bring a sense of optimism back to the market. Historically, after elections, we often see a bounce in economic confidence as more people get clarity about the future, and this could lead to a more favorable environment for real estate investors. So the bottom line is, yes, the market is shaky, and doing nothing is also taking a position and speculating. As long as the numbers make sense today, we actually prefer making more informed decisions rather than waiting for the right time. Now, if you are ready to take the next step, or if you have questions about your options in real estate and investing in Toronto, just reach out to us. Let's explore the best strategy for you based on real data, not guesswork. We specialize in helping investors make confident, informed choices when it comes to multiplex properties in Toronto. Whether you're interested in a fully renovated turnkey property or you want one that can be converted into a multiplex, we can guide you through every step of the process to ensure that you're making the right move. Here's how it's like to work with our team. We'll take the time to understand your goals, crunch the numbers to find the best investment opportunities for you, and then help you land the right property. If you want to dive into renovations, we can connect you with trusted contractors and guide you through the process. Once the work is done, we can even handle leasing and property management too. Are you ready to get started? Just head over to this link here and let's chat.